Okay, today we're talking with David Keller, who is the Chief Market Strategist at StockCharts.com. Maybe you've seen Dave lately on The Final Bar, where he's the host there, or on the Closing Bell Show on StockCharts TV. Dave, welcome. First question I got for you.
Yep.
Last year, 2022, being a tough, challenging year for investors, what tools and education should investors use to better navigate uncertainty in 2023?
I think 2022 was a great learning experience, a painful one for a lot of investors, particularly newer investors. And if you think about 2021 as a bull market phase, 2022 as a bear market phase overall, I've learned in my experience, bull markets are way more entertaining and way more fun because it feels good when the market's going higher. But I've learned way more in the bear markets than the bull markets because that's when the painful lessons sort of ripple to the top very, very quickly. So what I would think of if I'm looking at the last 2 years is look at a stock like Alphabet and think about what 2021 looked like versus 2022. You had a big rotation from what you call a bullish phase, higher highs and higher lows in 21, a bearish phase of lower highs and lower lows in 22. And there was a big, massive rotation away from growth stocks working to growth stocks not working. And I would be thinking about what would help you navigate that rotation more effectively. I think a lot of investors probably held on a little too long as the evidence was clearly showing that the market was deteriorating. So for me, I think it's thinking about risk management in terms of how do you lock in gains and how do you minimize losses? Because I was taught all large losses begin as small losses. And I think, what you don't want to do is hold on to a losing approach and a losing trade longer through the course of the year. And I think 2022, unfortunately, caused a lot of pain that probably could have been alleviated earlier on in the year if you focused on the rotation of the evidence.
What are some of the common behavioral biases faced by investors, and how can they better address them going forward?
Yeah, unfortunately, Steve, there are a lot of them, and I found it really comes back to how we're hardwired as human beings. We are programmed to make, unfortunately, some bad decisions with our investments. A couple that come to mind that I'd highlight for you. One of the most prevalent is confirmation bias, which is this idea that you essentially come up with your game plan, you develop your thesis, and then you start gathering information, right? So I'm bearish on Bitcoin, I'm bullish on Microsoft, and then you start gathering evidence. And unfortunately, what happens is you basically just confirm or you reinforce the decision you were already going to make. So instead of actually using the evidence to help convince you of the weight of the evidence and develop an awareness of what the market's telling you, you focus instead on a decision you are already going to make. So what you need to do is really focus on gathering evidence first, then look at the weight of the evidence, and then make a decision after that. The other one I would highlight, Steve, very quickly is called the endowment bias, which is basically we develop an emotional attachment to our positions, and not just in the investment world, but in any of our belongings. And because of that emotional attachment, we don't want to let them go. And that's what basically creates that situation where we hold on to losing trades way too long just because we're connected to that thesis. So being willing to let go and admit when you're wrong is one of the most challenging, but probably one of the most important things for an investor to do.
I know you're a student pilot and have spent lots of time in the air. What are some of the tools pilots use to take emotions out of the decision-making process?
Yeah, it struck me when I started learning to fly airplanes how many parallels there were between trying to keep a plane in the air and have a good flight versus trying to keep your portfolio in the air and doing well and having good performance. And it all comes down to the fact that both pilots and investors are faced with emotions, right? And you are naturally inclined to make decisions based on your emotional state. So one of the most important things that pilots do is they have a series of checklists and a series of routines that they follow to a T, and it allows them to focus on every sequential step, and you follow this routine every single time. And I bet for our listeners, if you think of an example in the last 12 months where you basically did not follow the checklist, you didn't follow your normal routine, you just kind of went off the cuff and bought or sold something just because you felt like it was the right thing to do, that usually gets you into trouble. And so thinking of using a series of checklists, making sure that you check the boxes on every one of your decisions, buy decisions and sell decisions, I think overall will keep you in the things that are working and make sure, again, that you let go of positions that are no longer working. That was probably one of the most important lessons I learned learning to fly airplanes. And I think as an investor, the consistent use of checklists, having a consistent routine is just vital.
What was your biggest investing mistake in 2022, and what did you learn from it?
And I love that question. That's one that in my previous role as an institutional investor, we would often ask each other, what went wrong? What did you learn from it? And what are you going to do differently? And I think, unfortunately, in early 2023, it's a really good time to make that assessment and ask that question over the last 12 months, right? What went wrong? For me, I'll give you a perfect example, and I have a couple, but the one I would share is with cannabis stocks, right? If you look at the chart of MJ or YOLO or any of those cannabis ETFs, in a pretty consistent downtrend. And I remember vividly, YOLO actually rotated higher and traded up to around $6 a share, if I remember right. And it bounced up there a number of times. Now, my checklist, my discipline as a trend-following investor is to focus on breakouts, to be patient and wait for the stock or the ETF to break above an entry point or break above a trigger. It never really got above $6, but I was a little impatient and I just put the trade on anyways. To this date, it still has not seen $6. I think it's down around $3.50 or $4 a share probably today. And so it was a great reminder, a painful reminder to be patient and stick to my discipline and wait for the confirmation that validates the fact that things that hadn't been working are starting to work. And I think if you look at gold stocks or materials names or any of those healthcare names that had really good runs here in the last couple months, there were signs and confirmations that they were starting to work. And for me, it was a good reminder to be patient.
Okay, lastly, StockCharts focuses on tools, education, and commentary. Why are all three of these areas so important for investors?
Ooh, fantastic question. I think for me, sticking with energy, even though it felt like stocks like that in the first half of the year, you had all the bearish signs of market weakness in terms of negative breadth, deteriorating market sentiment. A lot of stock indexes and everything else broke down. And as the S&P made a new high in January of 22, a lot of things made lower highs, right? Small caps and breadth and momentum all actually were already breaking down. Having said that, energy stocks were working and they were going higher. And so that was a great reminder for me to focus not on what should work, but actually what is working. And despite whether or not you thought energy stocks would be a good bet in the first half of the year, recognizing the strength in some of those value-oriented parts of the market helped me to sort of focus there instead of growth, which lined up very well with a rising rate environment. I think that was pretty helpful. But focusing on the evidence that the market provided back to me was a great win I felt in the last 12 months.